Good morning, traders. Let's take a look at today's market. So, starting with the US dollar index, earlier this week, Fed Chair Jerome Powell signaled that the October rate cut remains under discussion and that quantitative tightening may be nearing its end. This triggered a softer US dollar, with the index holding near 99 in the early Asian trading on Wednesday. The ongoing US government shutdown has paused key data release that guide the Fed policy, leaving markets without their usual indicators. With the view of no data, no policy change dominating the expectations, uncertainty has paradoxically lent some support to the dollar. But still, if quantitative tightening ends and rate cut expectations persist, the current rebound could be nearing exhaustion and traders are now watching for signs of a potential top on the daily chart. And technically, the dollar remains within a potential bullish flag formation, suggesting room for short-term upside before any reversal. The 14-day RSI sits above 55, showing steady momentum. And the resistance stands at 99.56 and the psychological 100 mark, aligned with the August high at 100.26 and support levels appear at 98.45 and 98 psychological level. So moving to WTI crude oil. The oil price traded near 58.3 per barrel on Wednesday after sliding nearly 2% on Tuesday to a 5-month low of 57.68. The drop came after the IEA warned of a looming supply glut by next year, while OPEC continues to boost production. The IEA projects a 4 million barrels per day surplus by next year and trimmed its this year demand growth outlook to 710,000 barrels per day, citing weaker global growth and rising electric vehicle adoption. And this forecast, coupled with ongoing trade tensions, weighed on the sentiment. And technically, oil remains in a firm downtrend, trading below the key $60 levels and believe the 21, 50, and 100-day moving averages, forming a solid near-term ceiling. The RSI sits below 40, showing bearish momentum, but not yet oversold. Immediate support is near 57.32, and a break there could retest a yearly low at 55.14. Resistance stands at 60 and 61.79, with rebounds likely kept unless the prices reclaim these averages. So now we talk about gold. Spot gold touched a new all-time high near 42.18 an ounce in the early Wednesday trading, extending Tuesday rally to 41.79.5. The surge reflects expectations of Fed easing, renewed trade tensions, and robust central bank demand. Gold has gained 56% year to date, breaking about 4,000 for the first time last week. Major banks, including Bank of America, and now forecast gold could reach 5,000 by next year, supported by the de-dollarization trends, ETF inflows, and also ongoing geopolitical risk. And technically, gold continues to follow a 7-week uptrend along a rising trend line. After clearing 4,000 and 4,100, the outlook remains firmly bullish, with a new record high of 42.18 this week. The RSI remains deeply overbought, suggesting a potential short-term consolidation. Strong support lies between 40.85 and 4,100, while a break below could trigger a correction towards 4,000, and resistance target sits at 42.50 and 4,300. So last but not least, Australian dollar. The Aussie dollar rebounded above 65 cents on Wednesday, recovering part of the prior day's loss after the RBA Deputy Governor Sarah Hunt said that inflation remains higher than expected. Her comments echoed Tuesday RBA minutes, which showed policymakers see little urgency to cut rates given persistent services inflation and stable employment. Traders now await key data, third quarter CPI later this month, and upcoming labor figures for further clues. And meanwhile, the Westpac Melbourne leading index held steady in September, indicating subdued but steady growth. And technically, Australian dollars trades near 65 cents within a descending channel, maintaining a bearish bias. The 14-day RSI below 50 confirms a weak momentum, and support is at 64.40, 64.14, and 64 cents. And resistance lies at the 14-day moving average near 65.62 and followed by 66 cents. So that wraps up today's morning review. So watch for Powell's remarks and further OPEC supply signals and the US-China trade developments. So all likely to shape the volatility through the week. Thank you for watching.